Thank you for your patience. I hope I didn't bore you to death with what I was talking about just now. Can everybody see the trading screen now? Okay. We are going to start with the euro dollar, guys. Again, the euro dollar is within an extension wonk after larger wonks hit targets. I am not going to cover the three drive pattern again. At this point, I'm sure everybody knows about the three drive patterns that we have at in the euro dollar. Right now, the only thing that you have to know with regards to the euro dollar is that we are within the same situation as we were last week. We are having only one safe entry while we are within this range, and this entry is yet again proven to be profitable. This is the extension long drawn with an anchor from 1.3 to 1.337. This is the only safe entry that we have. This is this extension long. Now this extension long is valid because first it came from a halfway back long that traded from this micro measured move long. That is the entry that gave this whole upside a push. And it also traded once to target. It traded once to target, as you can see. Here it is when it traded once to target. We are now within this extension wonk, and it is the only safe entry within this range. Until this wonk fails, there are no safe entries on the short side, because this is a confirmed range. It is a confirmed range because the opposing measure move shorts have been breaking. We broke the measure move shorts yesterday, like 4 times. Once, twice, 3 times, 4 times. And we might break them now again. We are against a halfway back short. I suppose that it's probably going to be failing because we are within a confirmed range. Because we have a safe entry, mate. We have a confirmed level of support. This is a confirmed level of support. It's just like last week. Let me move over here. Last week we had only one safe entry within this range. And this was the Draghi extension long. This was the only safe entry. And I kept on repeating myself over and over again for the whole week, and people kept on trying to fade me and short the top of the range. I got probably over 200 Twitter messages telling me that I'm a retard of buying the bottom of the range, and I just kept on saying the same thing over and over again. The only safe entry within this range was the confirmed support, which was this extension long. We are within the exact same situation here. We have only one safe entry in the euro dollar right now, which is the extension long here. I don't know if we're going to be going down. I don't have a crystal ball. What I do know is that we have only one safe entry within this range, and this is the one entry that we have traded 3 times now. Once, twice, 3 times, and 3 times got on free. Not, sorry, the 61-point end line is broken on a dip 4 pips under it. So I have a standard error of 4 pips. So that means that the 61-point end line will be broken if price goes under 1.341. Under 1.341, the 61.8 is broken. Does that make sense, guys? Again, I am repeating myself over and over again. Rafał, the only safe entry is this wonk. It is the only safe entry, and I'm going to move to a 15-minute chart. And I know that this might be a little bit of a hard concept, especially if you have a fundamental bias. This is the only safe entry because this is a confirmed level of support. It traded once to target. Okay. Rafał, you see this 50% wonk that went to target, right? Let me remove this. Okay. You see this 50% wonk over here that went to target. Yes. This means that this extension wonk is a confirmed level of support, and this extension wonk has given you one entry that got free, second entry that got free, third entry that got free with a front run of 4 pips here, fourth entry that got free, fifth entry that got free. Does this look like shorts are in control here? Because shorts have been getting stopped out without becoming riskless. Okay, so shorts Shorts had an entry here. Shorts had an entry here. Well, okay, this entry did get free, but they got stopped out. And if they retook this entry, they would have gotten stopped out again and again and again. So, what do you think looks better, longs or shorts? Um, about the entry point on the pips, uh, Rafał, we are going to cover this in a lot of detail, over the weekend. Now, this comes with the strategy. Again, I explained why this is a valid long, but I guess unless you know the strategy like extremely well, like us, that might not make sense. It is a valid long because we had a halfway back long over here. Rafał, you see this? This was a halfway back long that not only went to target but started blowing through targets. Now, when you have a halfway back long that goes to targets and starts blowing through targets, the high of this Fibonacci, okay, the high of this Fibonacci that you draw, this halfway back long that traded, becomes the anchor. Becomes the anchor. Anchor is such a beautiful word when it comes to this strategy. Whoever thought of it, of calling you just this becomes the anchor. This is how you start drawing the fib. And you can see that we had this thing go to target once, and now we are seeing it retrade again and again. We will record the weekend webinar, yes, Catherine. And we will make this webinar obviously only for subscribers. Rafał, do you understand now? Do you see how this halfway back long that went to target and started blowing higher gave you the anchor? This high of the halfway back long that we held became the anchor of the Fibonacci. I know that the concept is a bit weird, but you will get it. Okay, I'm going to move to the euro yen because it is the prime shining example of this thing. Actually, I'm not sure which is the prime shining example, but okay, for example, the dollar yen, we trade a halfway back wonk over here. We trade a halfway back wonk over here, right, on the dollar yen, and this high over here because we start blowing through targets. Okay, we start blowing through targets. This high becomes an anchor for your extensions, and you can see trade once to target, twice to targets, and we start a new series of extensions afterwards. So we are going to try to make sure that everybody gets this concept. So on the euro dollar, only safe entry, this halfway back, this extension long here. If we fail this extension long, we could potentially be starting a larger correction. Until we fail this long, which we will fail under 1.41, there are no safe entries on the short side. There are zero short entries on the short side. Zero short entries on the short side until we fail this extension long. So this is on the euro dollar, bullish above 1.341. Under 1.341, we could be seeing a larger pullback, and we could potentially be starting a series of shorts. That is the best thing that I can tell at the current point, at the current juncture. This is the best way to view the euro dollar. Bullish above 1.341. Bullish above 1.341. Now I'm going to move, let's see the poll again. I think, yeah, we are going to move now to the euro yen and then to the Aussie dollar because we have Zen who voted for the Aussie dollar. Okay, so now we are moving to the euro yen. The euro yen is a peculiar instrument, very interesting right now. Now, Peter, a friend of ours that I've said a couple of times, has outlined to me an awkward because what I was looking at was yesterday, and I got free like 20 times, and I was making like okay, not 20 times, but I was won like 4 times here, and I was making over 50 pips 4 times, and I got stopped out at break even 4 times, which is annoying. Yeah, I could have made 200 pips, but what Peter outlined is we are holding actually this daily extension long. we are holding this daily extension long. So I would say that until we fail the 1.31, 1.3 to 1.18, 121.18, I don't think, I don't, I don't think that we are going to go down. Yes, Steven, I actually think the same thing, but perfectly technically speaking, the anchor, this anchor is pretty valid. But yes, I know which anchor you're talking about because I had it as well. I know which anchor you're talking about. I'm assuming that you are talking either about this anchor. I think you're talking about this anchor, no, Steven? Okay, Dr. Zetz, we still appreciate you coming. But Peter, what Peter outlined is actually true because this is the next daily wonk. It just occurred so that we had a couple of weird daily, some weird daily action, if I can put it like that. But to be quite frank, what Peter is saying is this wonk is more valid than the other one because the other one was never to target. This long that you are seeing over here, this daily extension wonk over here, is the next daily wonk because the previous daily never went to target. This was a wonk that went to target. So this anchor is very valid. And when you look at it on the daily time frame, it looks pretty maniac, no? Looks pretty freaking nice. I am considering this to be the valid anchor because this was a long that went to target. This was a long that failed to go to target. Exactly, Peter. Exactly, that is exactly my reasoning. So what Peter is outlining is a very valid anchor. So right now we are not going to anticipate any downside on the euro yen, any further downside on the euro yen while we remain above 1.21.18. So above 121.18, we are not going to anticipate any further downside. Confirmation of upside might be when we break this bullish flag. And that aligns very nicely with what I have been saying on the daily chart that the euro yen should be going 500 pips higher. And ideally, these 500 pips higher are going to come this week into February, this week into February. So I am certainly, like I have been buying the dips on the yen crosses like crazy because I anticipate another move higher into February and then February, maybe March even, to be a huge down month. That's why I am sticking to buying the freaking dips. Interesting thing about the euro yen is that it has been breaking its halfway back shorts. We have one halfway back short broken, we have another halfway back short broken. So now it should be interesting to see if this halfway back short breaks as well. I am long the euro yen from here. I am long the euro yen from the bottom. So, well, not the bottom, like 1.315 or something. So we will see how that goes. I shall say for now the euro yen is bullish while above the 121.18 mark. Euro yen, let me just type it in for those that cannot understand my accent and stuff like that. Bullish above 1.2, 1.18. In terms of Gartleys, now this is a bit of an awkward thing because it is not the best looking Gartley pattern. It is not the best looking Gartley pattern, but we certainly have a bullish Gartley trading. You can see a perfect 61.8 retracement over here of the B point, and then we traded the 78.6 retracement over here with a small front run. So we potentially are also within a bullish Gartley. We had this Gartley trade first in the Dow yen. Again, this is not the best looking Gartley, technically speaking. It is actually a pretty ugly one. And it should have been something like this. Now I'm going to remove the trend lines in the channel. But what I'm going to show you is that the BC extension, a perfect Gartley, has a 1272 extension, BC extension. This is the perfect Gartley, and we are rejecting from over here. We are rejecting from the perfect extension of this Gartley pattern. So certainly a lot of support. Stephen K, I know that you took the long, very good entry. You took this Gartley, which is, again, I'm going to say, not the best looking Gartley, not the best AB equals CD over here, but speaking purely from the way that Scott currently trades, this would have been a valid Gartley pattern. This would have been a valid Gartley pattern with a small front run of the 61.8. So this is a valid Gartley pattern. Ugly but valid. So we would expect a run to the C point. So I would front run the C point by 15 pips. So I would expect at least a move to 122.3s, 122.3s on this Gartley pattern. This is a bullish Gartley. When you actually draw it like that, it starts to look pretty decent. The only thing that doesn't look decent is the AB equals CD, because we had shorts fading over here a little bit. So the time symmetry is not perfect. It's not as perfect as it can get. But this is certainly a bullish Gartley. Everybody gets this? I am going to be working very hard over the weekend on providing specific. I'm first going to start with the Gartley and the bat patterns, and then I'm going to cover the shark and the 5-0 patterns. Those are my favorite patterns. Traps and butterflies. Butterflies are, I think, one of the most profitable Gartley patterns, but the problem with butterflies are that they're so freaking rare that you're never going to see them. Seriously, they're so freaking rare. They are extremely rare patterns. Butterflies are. This could actually be a butterfly pattern in the making. If this is a butterfly pattern in the making, and I'm going to quickly cover this, and this is why you should be looking, if you took this entry on this Gartley, you should be looking to take profit soon. This could be a butterfly in the making, and if it is a butterfly in the making, what we will see is this pattern looks something like that, and then this would be a very beautiful butterfly. You would be looking for something like this, a failure just around the highs, and a move something like that. Sorry. If this is a butterfly pattern or emerging butterfly, this is how it's going to look. Because that is not correct. Because we had a new low, so AB equals CD is not correct. The margin of error is too large in the time structure to make this valid. But I know what you mean. I am, how can I say, I have not done so much personal analysis on Gartley patterns to be able to validate if that would be correct from my personal experience. But keep an eye on the butterfly pattern on this butterfly that could potentially be emerging. If it is, we are going to look at the retracement of this leg at the 88.6 line. So have the 88.6 drawn, and be careful of potential rejection over here. Paddling no, UDCHF. And I think I might be getting stopped out on the Dover Frank soon. Actually, the Euro Frank is hit by a train as well. Somebody is defending those levels. Anyways, the yen is looking good. The Euro yen especially. I'm going to move to the dollar yen now. Yep, I might get stopped out after all on the dollar franc, but we don't care if we get stopped out on the Euro franc and the dollar franc because we are freaking riskless. We are riskless, so we don't care, right? Yesterday on the dollar franc we had a bullish Gartley pattern over here, That gave us a wonk entry in which we are still in. I think I'm making like 14 pips. This entry is riskless. Yeah. This entry is riskless. We had a perfect Gartley. I mean a freaking perfect Gartley pattern. This is as beautiful as a Gartley pattern gets over here. And we are potentially now in a larger Gartley pattern, ugly looking one, like the one we are in the Euro-Yen. We are also holding the next extension wonk in the series, so we are in wonks until they fail. The failure level on USD Yen and USD JPY is the 90.28 mark. 90.28 is the failure level. What we are in now is ugly Gartley, like that. Actually, maybe not that ugly. Depends on the point of view. Yeah, actually not ugly at all. It's pretty decent, but nah, it's ugly because you have to draw it over here. If you draw it like that, that is a freaking beautiful Gartley pattern, but I mean, it really depends on how strict you are. In the end of the day, we are bullish until we are not uh, from the extension levels that we have drawn. Assuming this to be correct, we are in a nearly perfect Gartley pattern that is holding the 88.6 line of the XA retracement. We are now against halfway back shorts drawn from the top. And we are now going to observe if these halfway back shorts get any participation. We are now in observation mode. We need a clear break of these halfway back shorts. No, no sepak. Although, even we have Alexander was saying that the series doesn't start from there. He is correct, but because of the Euro-Yen, the over correlations with other yen crosses, we are looking at all the way halfway back short, all the way halfway back short. So if we break this short properly, and I mean properly this time, not like the past couple of times with a candle quote, because you can see that all candles, we never started a candle outside the 68.8 line. And if we start a candle above the 61.8 line, a candle opens above it and many days close above it, I would say that we have now started our next in the series measure move longs with targets on USD Yen at the 81.5s, 81.6s, depending on how optimistic you are. We are just arguing on targets with Alexander. The conservative target is here. The optimistic target is 92s. I am going with the conservative target where I'm going to be booking one half of my position because that is the type of person that I am. Now, again, let me remove this butterfly. If you are optimistic, your targets are on the Euro-Yen are around the 124 mark. If you are a bit more conservative, you should offload at least one half of your Euro-Yen position at 123.5s. 123.5s is where you should look to offload at least one half of your position. We are bullish until we are not. Do not short a market that is not going down. Trend is your friend. That is like the only wise thing I can say here. It is just absolutely silly to try to short the yen crosses in my personal opinion. I said this before, I'm going to say it again, moving on the daily chart. We are in a developing bearish shark. And until this bearish shark finishes completion, which is 500 pips higher, there is no point of shorting the Euro-Yen. I cannot justify shorting the Euro-Yen. This is the bearish shark. We are talking about the same curse. Actually, I think the CHF yen, I think the CHF yen short is working, which unfortunately we didn't take, and I consider this to be my mistake. I'm going to check it in a bit. Okay. This is the bearish shark, and we need to confirm this bearish shark completion. I'm not going to draw the fibs because I have done that in a report. I have done this in previous webinars, and I'm just getting tired of redrawing the same things over and over again. So I am looking for 500 to 3 to 500 pips higher in the euro yen before a full halfway back wonk in non-emerging 5-0. In non-emerging 5-0. This is in an ideal world is what we are going to be looking for. Now I'm just quickly going to check the franc yen, because I said that the franc yen is our tactical short. Actually, no, looking freaking bad as well, despite the franc strength. So, yeah, again, we are looking for another 200 pips higher before we can short this. We have a report on that, so I'm not going to cover it again. No point of me covering stuff that we have covered before. Now I'm shortly going to check the Aussie dollar. The Aussie dollar, unfortunately, yesterday my platform crashed, and it seems like it hasn't saved the bullish bat that I drew. I'm just quickly going to draw it. This over here is a bullish bat that traded, it's that rejected from its potential reversal zone, marked by the 2 times BC extension. So check this. If you take the 2 times BC extension, if you take the 2 times BC extension, this is exactly where we rejected from. Now, I was very conservative with this thing, and this is my mistake. It is one of those trades where you trade the pair and you decide to be very conservative, and you are being a very stupid person and not take the trade. So, if anybody took this trade, good job, guys. This was the first entry, and the stops should have been 30 pip stops. I wanted to protect subscribers and give a trade with a very small stop loss, with 12 pip stop loss. It was my mistake. If anybody took this trade, job well done. You have had your first targets reached, pretty much, and now this pattern is invalid. So from here on, I have no idea what is going to happen in the Aussie dollar. All I know is that this shark, that this bat traded, and anybody who took it is netting like 80 pips. Should have made at least 80 pips, which was the target that we were looking for. I'm very sorry that the entry was not filled. I gave the entry over here. It really, the first entry that I gave would have gotten filled. The first entry I gave was in 1.3085s. It's really my bad for not taking it, so I apologize again to all subscribers. I decided to be very conservative. I fell in love with the fact that the 88.6 line was aligning with the full halfway back wonk. I'm very sorry for not giving it, so what can I say? Alexander is going to talk a bit more on that. Now, to move to the dollar franc, the dollar franc will probably roll me over and stop me at break even. Well, actually, a bit less than break even. I think like I'm going to lose like 20 pips in the end of the day. We are still within a full halfway back wonk, so who knows? Who knows? We are within a full halfway back wonk with an inverted head and shoulders. The franc looks like somebody is defending the euro franc at 1.25. Maybe S&B is taking profit. I don't know. It was by far the best setup on Friday. It now looks awful. But I am maintaining my long position here on the euro franc. Similar situation. I'm about to get stopped out at break even. We are holding the 61.8 line of this long. We are bullish until we are not. However, if we fail this long, we are potentially going to be starting a very large wedge, or we are going to see downside to a full halfway back long. So I don't know what that means in terms of the dollar, franc. We are still holding just by a margin. Just by a margin, we are holding the. Just by a margin, we are holding these longs, but it seems that, as you can see, maybe S&B is or large funds are defending 1.25s. Uh, the euro dollar going nuts. In the meantime, again, as I said, there are no safe entries on the short side, and I hope you now get my point. uh, Euro franc, dollar franc looking awful. That's about the only thing I can say. If I get stopped out of this trade, and I am probably going to get stopped out of this trade for actually it's gonna be at a marginal profit because I booked some. I'm going to book maybe like 20 pips, but let's consider it a break even. We are going to look to buy all the way halfway back long at the 1.228, and I'm not going to be taking any positions before that happens, or I get a confirmation of a wedge. Euro franc looking bad, dollar franc looking bad. I am probably going to get stopped on both of those. We need to see a very strong bid from here. Maybe, actually what needs to happen here is something like this. We need to see just a ridiculous bid from here until we see it. Yes, Peter, I just saw your tweet and you are absolutely correct. I would still have it. But yes, the reason I just decided to take that scalp because I know a lot of people. I've promised to do a live scalping webinar. However, Peter just said that if I wasn't doing the webinar, I would probably still have that other half, and yes, I would have. Anyways, that doesn't matter. The euro franc, if we fail this series of longs, we are either going to be starting a triangle or range, or we are going to be doing an AB equals CD that's going to align with all the way halfway back long. At this point, we are within longs until they fail. The failure level is just a bit under us. I'm debating on moving my stop a bit. Let me check if I should. Actually, what is it? It's like 5 pips difference. Whatever. Yeah, I'm probably gonna get stopped on the. Man, I'm so pissed. Seriously, I was making 100 pips yesterday on this thing. Like 90 pips. I should have taken one half off. Euro dollar just went nuts, and the franc is not liking it because the dollar franc is. I have no idea what's going with the euro yen. Okay, with the euro franc, I really have no idea. I have like the euro franc randomly gets a bit with the euro dollar. Like it's like it decides when it's going to move with the euro dollar, and like in certain situations it decides no, I'm not going to move with the euro dollar. Like I don't get it. No idea, guys. Seriously, no idea. So probably going to be safer to stay outside of the franc for a while. I'm still looking to short the franc big time, but maybe not from here. And I'm going to get stopped on the dollar franc very soon. I don't know, unless we get a magical support here, things are not looking good for the franc. The dollar franc is waiting too much on the euro franc, it seems. We'll see. I don't know, guys. I don't know, guys. Let me see. Did I have anything else to analyze? I think that was it for my part. The best positions remain in the yen and in the euro dollar. Again and again and again. Best positions remain in those two. So that's about everything. Like my euro yen is doing on my first entry 60 pips now, on 50 pips now, and on my second entry 60. So I'm pretty happy. Okay, guys, I'm going to give you Alexander now. I sound a bit depressed because I really liked the francs, and I'm going to get stopped out at break even, which is a pain. But what can you do? That is how life is, so you cannot do anything about that. I'm giving you Alexander now, and I hope everybody understood what I meant. That the only safe entry within this range was the bottom of the range. Rafał, this was actually a perfect example for you. This was a perfect example for you, Rafał. Okay, guys, thank you very much. I'm going to be handing you Alexander now. Again, thank you for attending. Keep in mind that everything we do here is purely for educational purposes. We are only offering you a strategy and a way of trading that has been profitable in the past. Past performance, however, is not indicative of future performance. We do not have a crystal ball that tells us that we are always going to be profitable. There are such things as drawdowns. We just assume that we are going to continue to be as profitable as we have been before. So Yes, guys, we are just trying to educate you on the system. Thank you very much, and I'm giving you Alexander now.
Okay, guys. Hello. I think you can hear me now. Welcome to the room for me. George just said a mouthful over there. I don't want to repeat that. So let's get on with the things we have. Okay, what you're looking at is a 15-minute chart of the Aussie dollar. The Aussie dollar lately has been very annoying. As you know, I have been chasing it to the upside from a halfway back, which was drawn basically from a support level over here at 1034 approximately. Problem was that we couldn't get it. It was multiple times. We went in, went out, took a couple of full stop losses. What I want to talk about is, and Zen, this is mainly what concerns you in the Aussie dollar, bro. We talked about this in the morning. The Aussie has been acting a bit strange. Let me zoom in here. We pointed out, actually because George doesn't cover the Aussie. Um, what we have right now in the Aussie trading, and what we're supposed to have actually, is an extension short drawn from over here to lows. As you see, this failed. Um, just before the breakdown, there's another valid extension which we might have. It's the from 105 to 70, which right now is holding. What I want to point out is that the 0367 over here is a major support level which has traded once before and is right now supposedly trading again with a big, very big front run. This is a front run of maybe 20 pips from, okay, not 20 but 10 pips right now. We're still seeing resistance. What we identified, the problem with this anchor, the 10527, is that it didn't trade multiple times. That's what is disturbing about this anchor. As you can see, guys, it hasn't sticked properly. This is what we would normally have in the Aussie dollar, and what we would expect to have. Right now it's holding what we identified before, and right now it's holding perfectly, if I'm not mistaken, to the 61.8% line. Is this extension short, which hasn't gone to target, as you can see. If I get rid of the other one, as you can see, we basically, because we front run support by 10 pips, we couldn't get to our target, so we're still considering this extension to be in play. And as you can see, we're holding the 61.8% line perfectly. So at this point, it's very debatable what we're holding as shorts in the Aussie. Then I know that in the morning briefing, I pointed out that we have broken our shorts. Euro dollar just went nuts, guys. I don't know if you're seeing what's going on your screens. Risk is just getting a massive bid. Yeah, EURUSD I think at this point is breaking away from its range. Let me just have a look at it. Yep, new highs in the Euro USD right now. Right now, Euro Yen should be, yep, broke all the way halfway back. Pretty interesting. Yep, again in that trade. Problem is that our USD JPY is not feeling this bid because the dollar is getting crushed. Maybe they're expecting tomorrow for the FOMC announcement that the dollar is going to get kicked in the teeth or something or other. Some sort of crazy move by Bernanke again. I don't know. I don't know. Something's happening on the tweet deck. Let's have a look. Uh, Nothing much. Peter, short, aging much? Hell no. Yeah, I would like to hear what the bears regarding the Euro JPY have to say now. Okay, back to the Aussie. The Aussie right now is, as you can see, we're getting multiple reactions from this level. Right now, we're keeping the 50 of the larger support level. We first respected the 61.8% of the smaller extension short. Now we're keeping the 50 of the larger extension short. Zen, I'm sorry that I misled you in the morning. I had a bit of too much things on my hands while I was typing up the morning briefing. So these are the levels that you should consider, buddy. Above the 104.724, you can expect us going for a full halfway back short, which at this point would not be a limit buy, actually sell, because you have a valid support which has traded before against you. Just the moment we get to this level, if we break out of these shorts, the moment we get to the level, which is a 104.916 approximately, we will be looking at the Aussie dollar and how it's going to react. It's important to note that on my charts regarding the Euro Aussie, right now we're at a crucial resistance point. This is basically going to signal us where the sovereign flows of cash are going to go. Basically, are they going to go to the Aussie dollar or are they going to go to the euro? And for sure, they're not going to go to the dollar, at least from what we're seeing on this chart. Okay. Is that okay with you guys? Do you have any questions? Do you want me to answer anything regarding the Aussie? Okay, I think we have no questions. I just want to talk about a bit about what we identify in the USD JPY and also in Euro JPY, and I was basically an idiot for not seeing it before and trading today to this anchor. Basically, I tried to range play it. Okay, let's just bring up a chart of USD JPY. Okay, we got a bunch of drawings over here. Let me just get rid of this. Okay, as you can see, basically what we have in USD was supposedly an extension which traded. So what's going on right now is we would take this. Why I felt interested in getting into the USD today is basically pretty much because we have this setup. It's exactly the same in Euro JPY. The problem is that over here it's clear that we didn't reach target, and for the Euro JPY we're almost to target. As you can see, we held this level perfectly. Once came at this point, we were thinking, me and George were arguing if this actually went to target. As you can see, it traded back down and also respected the 50. This was the point where I considered this anchor, the 89,661. If you draw your extension long to highs from here, you basically have a perfect hold, perfect respect of the 50% within the extension. As you can see, traded once, made longs riskless, trades the second time. Right now, maybe seeing a bit of pressure due to the FOMC announcement tomorrow. As you can see on your screens, Euro JPY right now is breaking away from its shorts, if I'm not mistaken. George, am I correct? He's not even listening to me. Let me have a look. Yep. For now, what I don't like in Euro JPY right now is that it broke the short, but could not make a marginal for a new high. Basically, it's making a lower high right now. If we draw, yeah, sure, eat it, bro. No, George gonna eat my croissant. Sorry, guys. Okay, what I entered into on USD JPY in the morning was basically I was looking from here. If you draw the series, you have once goes to target, then you have another entry goes again to target. From here, you can either yep. This is the next one. You just pull from the same anchor to the new low. This is a traditional. You see, we go to target at this point over here. And what we had in the morning, I'll have to zoom in a bit so you guys can properly see. What we had in the morning is the break of the 61.8% line at the 90.528. Have in mind, this is a micro time frame. We track this time frame. We're going to talk about this over the weekend. We track the micro time frame in order to see how the trend is going. The moment you see micro shorts like over here failing, you can expect a micro long after that. Basically, what we had here is a traditional micro short which failed. After that, we drew up our traditional micro. Let me just get rid of the larger extension so you can see basically where we entered. Front run it a bit. I was greedy in the morning. I was thinking that this thing is going to leave without me because I've seen the yen trade. Doesn't matter. I entered with a 8 pip stop loss, and basically I was riskless. The trade made me riskless. What we're trading right now is this thing, which is an extension long drawn from the high of your traditional, which we held in the morning. This is the micro. I'm telling you what I don't like also right now, USD JPY cannot break away from its full halfway back, which is kind of annoying. And as you can see, we're getting a minor reaction. We still haven't broken this micro extension long. The break of the micro extension long will signal us basically that this move is getting some participation on the short side from the full halfway back. Basically, it will be a signal for us that the trend is not as healthy as it has to be, that we were expecting actually. Okay, any questions regarding this? The same thing is trading right now in Euro JPY. I'm really pissed that I didn't see it. If you want, we can go over it. Although George talked about it before me, I don't want to repeat what we're going through in this webinar because we want to share a maximum load of information with you guys so we can retain you as subscribers at a later date. Okay, guys. Do you want me to cover something, or let's actually go to the pound deck if you're in the room? I can't see. Trade isn't going that well, buddy. Let's have a look at it. Okay, what you're seeing on your screen is the 15-minute chart of the pound. Basically, this is the first halfway back. The signal is that we're going to have a downtrend. We talked about this multiple times. We entered short at the 161, which was the first halfway back traditional from the larger short that we held in the beginning over here. This was our entry point. Of course, we covered our short a lot earlier last week because we're not confident that this market is gonna plummet like this. To be honest, what we have right now trading in a pound, and it was a bit awkward. And maybe I shouldn't have given you the entries, guys, because the series was getting sloppy. From an anchor of 1.5953 approximately, if I'm not mistaken, 15954. Yep, this is the first extension short that we had. Found this dipping in seriously. Maybe it's getting an artificial bid from the euro. I don't know. I hate it when proper anchors fail. We'll see. The pound normally tests the 61.8% line, so it might hold. We'll see. Although the target of the opposing measured move is just above the extension. Okay, we'll cover this. This is what we had. Went to target. The moment that we went to target the second time, and we're expecting that the pound is going to come back and trade the 1.58, and it's going to give us an entry over there. But what happened was the pound sold off aggressively, and basically we set up in a traditional measured move short, as you can see. Held perfectly over here, went down, traded once, and directly plummeted to the downside. Started dipping into its 50. At this point, it traded some micro extensions. Actually, they're not micro, but they're valid moves. At this point, I don't think. Yep, I think this is it. Held perfectly. The 61.8% line again plummeted to the downside. What we were expecting and what I was expecting, I pointed it out to you guys in the morning, is that we would take our valid anchor and basically drag this thing to new lows and give us an entry for the break of the larger long trade, larger long-term long trade over here. This is basically the break of the long trend, the 1.566. As you can see right now, pound is trading aggressively towards our stop losses. I don't know, what we could see at this point is basically a hold of the 61.8% line if we're lucky. Although the bid is very strong right now, I don't see it holding. Or the other thing is we might hold this one, which was in play once or twice. To be honest, if we hold this anchor, I would be very disappointed in the pound, because this anchor is not something that we would normally consider. Yep, this is pretty much for the pound, starting to, yeah, trying to dip in here on the larger, yeah, deck. I think you're stopped out at this point, bro. I don't know if you pulled your stop loss a bit down, or if you listened to me where you should put it. We'll see. Either we'll have a reaction from one of these extensions, or nothing, or it's just gonna start. It's just gonna go to the upside. If it does, it will be certainly something new around the market, because the pound has been plummeting for quite a while. If we go to a larger time frame over here, maybe a 4-hour chart. What me and Simeon were talking about, if you don't know who he is, he's the other person in our office. He's basically our tech guy. if we get rid of all the things. If what Simeon was pointing out, that maybe the algos have attached themselves to the marginal new high over here. If they have, let me see if I'm drawing this correctly, because on his platform, looked like it held perfectly, but actually it didn't. Okay, so this looked a bit different in the morning. Basically, it was a perfect hold of the 61.8% line. What I'm thinking right now is that if algos have really attached themselves to this level, we have a break of trend, and the bid that we're getting right now is absolutely normal because we're setting up in a 50% larger larger short. Basically, if we've broken trend over here, we would have the full halfway back trade, or we would have the other daily extension, which we also could consider is basically drawn from over here, the lows, the 59913. We'll see, guys. This is a bit far-fetched. Yeah, pound just went nuts. Basically, aggressive bit in the market. Even the USD JPY is feeling it right now. But we'll see. At this point, pound is very unclear. I would tell you to stay out of it. I will be personally staying out of it for quite a while now. So we can get something. Simeon is telling me that Euro CHF just turned the candle other way around, basically to the bullish side. Yep, nice bit. This is classical. On a Monday, we set up. We retest our support from Friday, try out the levels again so that longs can feel comfortable. You know, all the managers, all the guys in the city, and all the hedge funders and everything, they set up, and on Tuesday they just execute, and you know, stuff starts rocking around. What we should say is that everything that happened is pretty much happening almost half an hour after the U.S. Open. So we can safely assume that right now U.S. is majorly bullish for the market. Risk on, for sure. If George was here, he would start explaining that we would have a 1 hour key hour reversal, key hourly reversal. Yep, that's pretty much it. Would you guys excuse me for a sec? I just really need to run to the toilet real quickly. I'll be back with you again. We're gonna cover gold. Be back in a sec. Sorry, guys. I'm back. Yeah, Simeon just wants to tell me something. What Simeon was just saying is that we have a new section on the site for the videos. He's gonna point it out to me after that. Okay, this is pretty much for the pound. Really annoying. I am really disappointed right now in the pound. Got sloppy when it should have stayed firm. Maybe typical for it. That's why George doesn't trade it. He has other preferences for instruments. Okay, maybe we should have a look at gold. George didn't cover it as far as I saw. Okay, gold. We don't need the 4-hour chart though. We need the. Okay, let's go with 15 minutes. Okay, this is how gold looks when you zoom out a bit. The big support level that we had was a 1629, which was broken basically from trading a halfway back short from the 1695 approximately. As you can see, it held perfectly, went down, broke support. From there, we started a countermeasure move long over here. We talked about this during not last week, but the previous week before that. We gave you guys some entries for trading gold to the upside because when gold held its first traditional over here, it was pretty much obvious that it's gonna retrade the 1695, and also because it broke the big level of support over here, the 1629. What we have in gold right now and what we're anticipating, have in mind that this chart is going to look a lot different tomorrow in the after FOMC. It's just gonna be crazy. I'm sure that gold is gonna react in a unfriendly manner as it always does. If you have any positions, please cover them before the FOMC announcement. All profits that you have on an FOMC, they should be considered unrealized profits. Basically, because the market starts doing crazy swings. I know that you guys, most of you are, good traders out there. Or for those that are not, have in mind FOMC and non-farm payrolls for that matter, which is on Friday this week, are the two most volatile event risks that we have in the market. What we're anticipating for gold is a halfway back drawn from here. Basically, we've seen participation of this from this anchor. Let me just 16. Okay, what we had in the beginning is, let me start because I get confused when I don't have a proper look. Yep, the 1689, then we traded again down, I think when we went to target 1629, up 1683. If you take the 1683 anchor to lows, basically right now is because we held a series from here. I'm not going to go into the details because we want to talk larger levels right now. We're expecting gold to basically keep this level. It could be argued that we were holding also an extension long short, actually drawn from the wick of this candle. I don't know if you can see it. It's almost the same level. So at this point is pretty much the same, whether you're going to trade the halfway back or the traditional. This is a very awkward retracement where the anchors of the extension and the traditional align. It's actually second time I've seen this. We had a bit in gold. We are dragging higher right now towards our 1667 entry for short. If you're gonna take this, which I am personally not, because tomorrow is FOMC, you would best sort of scalp it, play it with a small stop loss, identify where the opposing measured move is. Let's have a look what we've been holding. To be honest, yeah, this is it. Okay, we have one extension to target. from here. One extension to target, goes to target again, trades to the front run. Fails larger extension. Yep, and right now, as you can see, we're trading perfectly from the 1660.57 was our entry point for the long. Targets are above at the 1667, 1666 actually, 88, which is basically where you could place your entry for the short. It's a front run of $1. Gold normally doesn't front run too much. Very uncommon for gold to front run. Normally it would trade perfectly to the 50 and even dip in most of the times. So yeah, this is what we have in gold right now. This is also in the morning briefing. Have in mind that things are not gonna look like this after tomorrow. Normally, FOMC has a pretty big impact on the market. Okay, guys, do you guys have any questions that I can answer? I don't know what we could possibly have a look at. Pretty much everything. Me and George, we covered everything. What we're currently considering as positions and entries within the market. A lot of profitable trades over there. Basically, George outlined on the same page as him for this. Right now, the most profitable trades are in the euro, well supported. Trade the euro crosses. I made a small gamble basically with my USD JPY entry. But yeah, best trades are where the euro is, because euro is well supported right now. Seems like fundamentals are also kicking in, which in the end of the day is the most important thing besides technical analysis. I don't know what we could possibly talk about more. Let me have a look on the things. Your JPY also not a good look, to be honest. Okay, let's talk a bit about the site. This webinar has been extremely long because George lately has been having a lot of material to talk about. Let's go and have a look at the site. This is the main page of our site, basically. For the following, this is not fixed, I think. Yeah, 4 days. They're almost 3. The login is test and the password is test123. What pops up after you basically type in your credentials is these 3 buttons over here, charts. If you click on them, they come out, and basically is all the charts that we will post on our site regarding, you know, the instruments, Euro USD, GBP USD, Aussie dollar, Kiwi, Euro Yen, Aussie Yen, which is a very good pair. Aussie Yen is actually a very good pair, and it is an analogy of basically what S&P would do. Just throwing it out there for the people that don't know. Yeah, and we have exotic crosses. We have some analysis over there. Basically, everything we do as a report will be posted over here. SPX, we're going to start looking at the SPX because maybe it's going to increase its range a bit. Right now, it's untradeable. That's why I don't cover it. It's really boring on a micro time frame. Really choppy. A lot of gaps, and gap fills right now are kicking it. They're pretty much living their dream right now. Yep, and we will have a lot of analysis over here. If you click on reports, this is where the section where you have the webinars below. um, that we do. They will be recorded, and the latest 4 webinars will be available for subscribers to have a look at. 6. Okay, there's 6, but I'm not seeing. Oh, okay, on the video section. Okay, yep, this is basically the new section that Simeon talked about. What we should mention before going to the other page is that over here you have your morning and evening briefings, and basically the last 4 days of briefings over here. This is where we outline what, in the morning, what we think about the market. Normally comes out just before market open. Around 9:30 GMT. Evening briefing comes out by 12 GMT. It's very helpful. It's very helpful because it outlines basically the levels that are going to trade within Asia. If you click on reports over here above, these are also clickable. You can see basically different reports that we have posted regarding things that we have seen in the market. These are things that we would like to point out and that are important. Also, this is where we're gonna post special reports on request by our subscribers. As you can see, we don't trade the Nikkei, but one of our subscribers asked us to do basically a report on the Nikkei. As you can see, we did it on various time frames. We covered it from basically the largest time frame that the Nikkei has to went through a 4-hour chart, so we can identify where larger latest support would be. Also went down to a micro time frame, possibly giving an entry to our customer. Okay, if you click on education, you'll find basically the core of our strategy over here. You will find everything from the halfway back system to Gartley patterns. As you can see, George has posted a really interesting text on the introduction to harmonic trading for those of you who are not acquainted with this trading method. Me included, I'm still learning it. Looks pretty interesting, and to be honest, I have found very tangent points with our halfway back system. As you know, Gartleys are also Fibonacci numbers. So I have started to notice some things, but the moment we have something concise, we'll get it out there. You'll also see the trading rules that we have. Just click on it, comes out, explains how you should manage your account, how you should manage your risk, where your stop losses should be, etc. George has put out also a text regarding hedging and equity curves and drawdowns. Stats is something that we'll be doing in the future. It's basically we're gonna start looking correlations and seasonal basically trades. We're gonna start calculating all those things because we are strong proponents of this strategy, the seasonal trading. We, as far as we can, we never trade against seasonality. Most of the times we just look back what was going on in the market and would make analogies to it. Same days trading patterns and all that. If you're acquainted with seasonality trading, you would know what that is. If not, hopefully in the future we're gonna develop this section of our site. Okay, if you click on portfolio here, you would normally see the trades that we're currently in and the proper trades, like the highlights of our trading. Not only the highlights, we're going to post basically all the positions that we're in. We haven't been doing it lately because there's tons of work. As you see, it's only 4 hours till official launch of the site, so we want to prep everything. We want to have a fully functional site for our subscribers, which are, to be honest, at this point, quite a significant number. We're glad that we're having like decent interest in our site. Having in mind we're just starting out. Um, yep, we're gonna do a proper chat, which we're gonna have on the site. All of our subscribers are gonna be in there. Positions are gonna be posted. The most interesting things that we see in the market. You know, this is like a more timely communication between you and us. Also, you know that on Twitter we're available, ZNS Global and ZNS Signals, which is a private Twitter feed only for subscribers. Um, we have netted some pips for our subscribers lately. Euro JPY trade, which is basically the highlight from last week's trading. Doesn't matter. Let's stop bragging with it. It's past now. We're looking for the next profitable thing. If you click on videos, I myself am clicking for first time over there. Yep, it's the latest webinars over here in the webinar section. You just click play, you know, full screen thing, and you can see what we're talking about in the webinar. On the education section, Simeon has not uploaded anything right now, but the first part of this webinar where George explained how you should position yourself within the market, where your position size should be, etc., will be available here. Of course, this content is viewable only for subscribers. Last but not least, sign up button. It's pretty straightforward. This is what you get, things that we've been explaining. If you click on it, it pops out. What you get until the 7th of February is basically a $60 deal where you get us for $60 for 3 months. Pretty straightforward. Nothing too difficult about that. Any month after February the 7th costs $30. This is until April, basically. And from May 1st, the normal subscriptions, single month subscriptions kick in, and you can have us for $50 a month. If you decide that we're good enough and that you like us, you appreciate our service, you can buy the 3-month pack, which is a pretty sweet deal. Basically, any single month subscription for 3 months would cost you $150. If you sum it up, the 3-month pack costs you only $90, which is basically a 40% discount of the regular price you would get for 1 month. So yeah, guys, this is pretty much it regarding the site. Click on subscribe. This is dodgy page comes out. We're gonna fix this. As I've mentioned, our programmer is a bit lazy. Things are, you know, a bit slow. Yep, and this is pretty much regarding the site. Thank you very much for your attention. I'm gonna stop recording, and you can basically ask anything else.